Yo, welcome back to another episode of the Jack Mallers Show. I am your host, Jack, and you are listening to yet another edition of Mailbag Monday. Ladies and gentlemen, what a timeline we are living through. Holy smokes. It is geopolitical chess. We are seeing a crazy poker match. And the only rules is that there are no rules. All right. Without further ado, let me timestamp this episode. Guys and gals, I talked to you all at a Bitcoin price of $68,860. That puts Bitcoin's market cap at $1.38 trillion. Is this the highest Bitcoin's ever been? No. When was the highest Bitcoin's ever been? October 6, 2025. Funny you ask. I timestamp this every episode. We made an all-time high at $126,160 154 days ago. Bitcoin's 45.4% down from that all-time high. The last Bitcoin block mined since I hit stream. That would be Bitcoin block 939,996. Let me check that this is live and we are on the... Yes, we are live. Bad mic? I can't listen to the chat. I heard from Dylan. I can't listen to the chat. I have to just trust myself because you guys in the chat are supposedly trolling me nonstop. I can't open it. I leave it to Dylan. You got to trust in your friends, trust in your teammates. I leave it to Dylan. All right. With that, I checked to see if Dylan messaged me. Nope. This show gets started. All right, boys and girls, here's the deal. The title of today's episode is Oil, Bonds, and Bitcoin. The rules are that there are no rules. What a timeline we're living through. I continue to believe we are living through the best of timelines. We're going to get into everything that's happening in Iran, in financial markets, with AI. But before we do, I want to give a special shout out to this young gentleman here cooking sourdough bread. Okay. I was waking up in the morning, preparing for the show, doing my thing. I have busy Monday mornings. Monday is when I talk to my executive teams at both companies, and then I prepare for the show. And I saw this tweet someone tagged me in, said, kind of looking forward to waking up at 1 a.m. tomorrow to listen to Jack talk about the markets while I get ready to bake 30 breads. I was like, dude, that is an awesome tweet, first of all. Where the hell are you that it's 1 a.m. right now? And what do you mean 30 breads? I've never heard anyone say that. Like 30 loaves of bread? I want to shout you out. And he confirmed it is, in fact, 30 loaves of fresh sourdough bread. He said every Tuesday and Friday, he bakes fresh sourdough in the wood fire oven to fund his Sats habit. 30 days an average day. 50 is his all-time high. So shout out to this guy. I saw everyone flood his mentions with, yo, let me buy some of that bread. Do you ship? I just wanted a little bit of a wholesome shout out before we get into things like war, things like geopolitical poker. I mean, this is intense time right now. And we just want to lead with some love. Lead with some shout outs. Bitcoiners support Bitcoiners. And so shout out to you, brother. If you guys eat sourdough, order this dude's bread. I mean, look at that bread. Looks like unbelievable bread. Cozy, warm fireplace. Okay. The other thing I wanted to say is I saw some people being like, you're a public company CEO. Don't you have better things to do? And the answer to that is no, actually. I don't have anything better to do than just be a good dude. Okay. Let me tell you guys something. I think that people want to do business with people, okay? I don't think people like doing business with large corporations that they don't really know, with people that they've never met and feel like they don't understand. I think people like doing business with people. I love local businesses. You ever go to your local brewery or your local steakhouse or this dude baking local bread? And It's awesome. Why is it awesome? Because it's not a large corporate margin optimizing machine. It's got personality and it's got a story and it matters to the people making it. It's got character. And I'll never change from that. Okay? Like when you buy Bitcoin at Strike, you're buying Bitcoin from me. Okay? So people have also said, how do I support you, Jack? Do you do ads? Can I tip you? No. If you want to support me, you can use Strike. Buy your Bitcoin on Strike if you want to support me. You know? So anyways, wholesome moment. I think this is an awesome tweet. This guy is awesome. The fact that people are getting ready for work, listening to the show, in the gym, listening to the show. You know, we're just normal people trying to navigate the era that we were born into. We are in unprecedented times. We're trying to save money for our family, for our future. We're trying to fix the money and fix the world together. I'm never going to be better or bigger than that. Absolutely not. In fact, I think that's what's wrong with the world. The world has lost its soul. It's lost its touch. It's lost its character. And so who am I going to be? I'm going to be the podcaster that's just a normal fucking dude, because guess what? We all are. And people that pretend they aren't are full of shit and full of themselves. Doesn't matter. And I'm only going to build products I use. I'm a customer of all of my products. And if you want to support me, it's like a local business. You can come and use my products. Like if I were running a pizza shop, how would you support me? Come get a slice of pizza. If you want to support me, buy your Bitcoin on Strike. Bitcoiners support Bitcoiners. Shout out to this dude. This was just a super wholesome moment. This guy's middle of the night baking bread and we're in his ear right now. It's fucking awesome. And if you guys eat sourdough, you should order his sourdough. Okay, another thing before we get into the war and the nitty gritty and the financial markets and the bond markets. I published this episode live to the internet. So I know that you guys are always asking how I'm using AI. AI continues to make me a way more efficient person. It is actually insane how I use AI. It's blowing my mind. So let me actually show you guys. So let's go to localhost. What port was I running this on? 3000. So I built a tool this morning called JMS Resources, which allows me to actually upload my resources to my tool and build a source URL. I have some tags and some notes to it. And this is the entire episode today, all of these resources here. And what this allows me to do is actually host the show online, because you guys said you really wanted to be able to use the slides on your own, or you wanted to be able to link to your own, or link from where I'm linking tweets or linking articles. You guys want to be able to find the sources I'm using. So you can go to JMS, stands for the Jack Mallers Show. So jms.jackmallers.com/the episode number. So this is 108. And all of the slides are here. And actually, I link the sources. So you can click into the sources and it'll take you to the tweet or it'll take you to the article I used. So I will now upload all of my episodes live to the internet at jms.jackmallers.com/episode number. And it will link to all of my sources. So it'll link to how to sign up to Luke's newsletter. I sign up to all sorts of macro research. I obviously have a curated Twitter feed. And so I know that was a request from you guys. And so you guys can check this out at jms.jackmallers.com/108 for today's episode. And I'll continue to use AI to build insanely cool shit. And I continue to encourage you guys to do the same. Cool? Okay. With that, let's get into chapter 1. Oil, war, and chaos. Sunday night futures and the biggest oil reversal in history. What am I talking about? Late last night, when futures markets opened, oil went on a tear, okay? It broke through 100. It gapped all the way up to, I think, 130, 140 maybe. I don't know if it got that high, but it started to look like gas was going to be $5 a gallon. It was bad. It was bad. I mean, everyone was writing and estimating what inflation was going to be in prediction markets, and chances of over 3.5% inflation in 2026 broke 50% for a second. Markets started to really, really freak out. As I record to you now, I think the screenshot on the right is outdated. When I took the screenshot on the right for this episode, oil had fallen back below $100 a barrel. And I think oil now has an 8 in front of it. I think oil is in the 80s and has entirely erased the entire move late Sunday night. Okay, really quick on this. I just want to make the observation that, in my opinion, what Iran is doing is they're choosing inflation over nuclear weapons. What do I mean by that? Well, as we'll get into in the episode, I think that there is some very serious geopolitical games being played here between nation states. Very serious. I actually cannot believe the United States is engaging in this and is doing this. I am concerned, I would say, to just broadly state. I am a little concerned. The way that Iran is, quote unquote, fighting back is lesser with nuclear, right? That's the claim from the West, is that Iran has all these nuclear capabilities. They're out to blow up the whole world. They're fighting back with the oil price. Okay, they're effectively saying, in more or less words, which we'll get into detail later in the show, Iran's fight back is, we're going to close the Strait of Hormuz, which we've all talked about last episode. That's going to jack the oil price up. The oil price up is the price of energy. The price of energy causes inflation. Okay? You cannot tame and fight inflation if you don't have cheap access to energy, period. I don't care who you are, where you are. Okay? So the U.S. would get shocking amounts of inflation if these oil prices continue to trend higher. And Iran is effectively saying the U.S. can't afford this war. They can't afford it politically because they cannot afford another bout of record-breaking inflation. And they can't afford it fiscally because the U.S. is already about $40 trillion in debt, and the 10-year is still over 4%, and the bond market is not actually supportive of this war. We'll talk about it later, but for the first time in history, or at least in modern history, bond yields are going higher, not lower. The bonds are not the safe haven. The U.S. has no way to cheaply borrow to finance this. And so Iran's fight back is through the oil price. They're saying, we can outlast what you can afford. We think that this is going to be days or weeks, and even if it's months, we can outlast it because Trump always chickens out. You guys can't afford it. Trump prides himself braggadociously about being the art of the deal guy. And Iran isn't buying it and is fighting back through the oil price. That's a key theme. So on the back of that, let's take a look at how volatile the underbelly of the U.S. actually is, because I would say it's very volatile. Things are looking very concerning. So the S&P 500 had its first 5% correction since November. The stock market doesn't look healthy. It doesn't look good. And it's kind of this perfect storm of ingredients. Because on one hand, you have this war, which is incredibly destabilizing. And the other thing about the war, guys, is, as I've said before, this fiat monetary system that we've built over time, us being the United States, it's a giant Ponzi scheme. And it's a giant Ponzi scheme because the people that largely own U.S. assets, like U.S. stocks, like U.S. treasuries, these are foreigners that we have been importing from. So the game is, we print dollars, we export those dollars to these foreigners. The foreigners export in return things like chips, manufacturing materials, food, oil to the United States. So the United States is not a net producer. They're not productive. They run massive deficits. And we just export this printed currency and we import all this real stuff. So that creates a trade imbalance. That means that we get a bunch of stuff and the world gets a bunch of dollars. Now, what does the world do with all those dollars? They need to buy U.S. assets. It's like getting a bunch of U.S. store credits in return for oil, food, manufacturing goods. And so what do you buy with U.S. store credits? I might as well take a little bit of Google, NVIDIA, Amazon. Yeah, fuck it. I'll buy some T-bills. I'll buy some U.S. treasuries, right? And so if capital is returning home, if collateral needs to be sold to finance war, to finance higher energy prices. What gets sold off? What is the world collateralized by? Well, U.S. assets. And so stock market starts to see a lot of pressure during times like this because it's what the world owns as collateral in the system, which is really not good. That's bad. That's a Ponzi scheme. So the problem has always been Japan can't fall apart because if Japan falls apart, they sell U.S. treasuries in the U.S. stock market, which forces us to fall apart. So everyone has to stand tall or else no one stands tall. That's always been the Ponzi scheme. That's the domino effect, the deck of cards, the Jenga game where you pull one leg and the whole thing collapses. Now, on the other side, we have what we've been talking about, this extreme deflationary force where all of a sudden, AI is taking everyone's job, and the stock market is also facing some headwinds because all of the multiples on these businesses are being highly questioned. For example, all of the FANG businesses, the Mag 7, the big tech, these are not like insanely high margin stock buyback companies anymore. You used to be able to kind of, sort of, in my opinion, not really, justify these multiples because the margins were so high and they would take the free cash flow and buy back their stock. So it was like a cheat code. It was like there's going to be demand for the equity because the company that's making so much fucking money is infinitely buying the equity because they have nothing else to do with the money. They can't invest it. Like they can't employ planet Earth. There's not enough office space in the world for them to pour in tens of billions of dollars of net profit a year. So they're just going to buy back the equity in their business because it's better than holding cash or government debt. And so it was kind of like this hack. It's just these are all functions of a broken monetary system. But now that's not how these businesses work anymore. They're not that profitable anymore because they're spending all of that cash flow on physical build out for AI infrastructure. And so not only is this going to really decrease their margins, it takes them from a capital light business to a capital heavy business. But the other thing is you're reducing the major buyer of the equity itself. People were comfortable buying the equity because they knew Google was going to be buying behind them. But if Google's not buying their own equity behind them, the question is who's buying? And if China's not buying and Russia's not buying and if Japan's not buying and Google's not buying, then who's buying? And you're starting to see a lot of weakness here, okay? So another really interesting thing we saw is the force majeure from Qatar Energy. So they declared a force majeure, which is basically we have to cease operations for something, like we have to violate a contract for something extraordinary that happened. Okay, so I have on this slide, Qatar Energy warns the Gulf is within days of stopping energy exports entirely. The Gulf states are reviewing hundreds of billions in promised U.S. investment commitments. So the Middle East is reviewing whether they actually want to commit to the AI build out in the U.S. And the SPR, the Strategic Petroleum Reserve, is at lows. It's drawn down from midterms. It was never refilled. So let me pause and explain this slide. So for one, Qatar Energy warns the Gulf that it's within days from stopping energy exports. We'll talk about this more throughout the episode, guys. I think that there is consensus that has been arrived at inaccurately. The consensus is that this quote unquote war is only going to last days, maybe a week or two tops. But this is Trump just bullying Iran. And this is a blip in the timeline. Nobody really cares. It's not clear to me that that's right. In fact, I'll show you guys that I think that's really wrong. But one hint is that Qatar Energy would warn the Gulf that it's going to stop energy exports entirely, okay? Also, the U.S. is in an AI race. They've declared that it is a national security threat if we don't win AI. And we now have kind of levered ourselves based on Middle Eastern capital. It's going to be really difficult for us to win this race without the support of the external investments to reindustrialize in the United States. Again, the United States has hollowed itself out over the last 40 years. The way I would describe the geopolitical chessboard right now is we are in the middle game, okay? The opponents, so the United States and its opponents have played the opening, have entered the middle game, but people have committed to a closed position, to the bishop pair, right? Like there's chess moves have been played over 40 years. And, you know, the United States is now getting into like very dangerous territory where if they make a mistake, the end game is we're going to be at a disadvantage. It's going to be not so pleasant. And so the fact that the Gulf states are saying, well, hold on a second, we might not want to finance your AI build out, that's a direct threat to whether the United States can actually win the AI race. Because over the last 40 years, the United States has hollowed out its manufacturing base, its industrial. It can't easily produce things, physical things. Like if we need to build physical infrastructure, not only do we not have the skills to do that and the capacity to do that, but literally, who's going to be employed to do that? Remember, the United States is a white-collar dominant nation now. We've pushed everyone to the coast to do white-collar finance and tech jobs. We don't have hands craftsmanship. Like no one's getting paid $250,000 a year to mine rare earths. I'd bet that people would, but there's not a market there. United States exported all of that to China. And so the fact that the AI race is now being threatened, it's a seriously noteworthy thing. And then the Strategic Petroleum Reserve. So I have this chart on here from Luke. So you guys can go to the slides on the internet now and click the source if you want to go sign up for Luke's newsletter. I highly recommend it. But this shows you the weekly U.S. Stocks of crude oil in the SPR. And you can see where Biden really started to use it in this post-COVID era. So Biden begins SPR drawdown in history to help contain oil prices post-COVID. And the level the SPR is at now, it was never refilled. And so we're at like 1980s level of SPR, which again is not good. Everyone is also leaving the Middle East. So check this. We have received info from our sources that Total Energies, ConocoPhillips, and Exxon are evacuating people from Qatar with evacuations planned from the UAE and the KSA. Guys, these companies, these energy producers, these oil majors, they would not leave if this was a 1 to 2 day thing, if this was a 1 to 2 week thing. Costco shipping suspends booking for Middle East routes amid conflict. Again, these are not things that would happen if the U.S. government is telling them, guys, we're ending this in a week. We're ending this in 2 weeks. This smells to me like this is a sustained war. This might take some time. The U.S. has entered something more serious than people realize. Now, this is just my opinion. This is a gut feeling combined with a bunch of evidence. But we go on, and this is from a Middle Eastern news outlet. I don't think that U.S. media would ever publish this. But check out the headline. Pentagon prepares for Israeli-U.S. war on Iran that could last until September. A conflict expected to last weeks is now stretching into months and threatening to dominate Donald Trump's presidency, according to Politico. Guys, this is not good. In fact, this would catch the markets entirely offside. I don't think that the stock market thinks that these oil prices are going to last till September, that this war is going to need to be financed until September. I don't think that the markets have truly appreciated all that's actually happening. It's not clear to me people know the game of geopolitical chess that the U.S., I can't believe the U.S. is playing this game. I'm a bit shocked. I'm always hopeful because I have Bitcoin and I don't need any government to take care of me anymore. But I'm shocked. I also included this tweet from Luke because you guys should check out this interview from Secretary Bessent from Scotty B. So Luke wrote, a sophisticated man like Bessent unsanctioning Russian oil as Russia is openly supporting Iran, reportedly helping Iran target U.S. assets, still fighting Ukraine, strongly suggests the Trump admin knows these oil disruptions are going to be longer than expected. So what Luke is saying here, I should have put the video in here. I'm sorry. But again, you guys can go on the internet. You can click the source to go to this tweet directly, and you can watch the video yourself. Bessent and what the U.S. Treasury actually did is they unsanctioned Russian oil, which is very bizarre because Russia is openly supporting Iran both in this war and strategically. Okay? So it's very interesting that we would unsanction Russia. It's not as if they had changed their behavior, they had stopped fighting Ukraine, that they had started to aid or struck a deal with us. Again, this is a very clear signal that all signs point to this lasting a lot longer than people would like to admit. All signs are pointing towards this is a lot more serious than people would like to admit. And the markets have not priced that in. I still am a firm believer of turn on your DCAs, but I'll get to it in a second. Be patient. We are working our way towards the big print. This is a bigger deal than people are leading you on to believe. This is going to last longer than people are leading you on to believe. The Treasury Department of the United States would not unsanction someone who is acting as a direct enemy in the middle of war unless they absolutely had to. They have to get relief on the price of oil because this is not going to be a day. This is not going to be a week unless Trump changes his tone, obviously. So check this. The oil price hit whatever insane levels last night. I don't know off the top of my head. 120, 130, 140, something absolutely insane. Overnight, by the way. Like, it closed Friday below 100, and then on Sunday, it had gapped up, and it was going to open. I mean, I think it did open Monday at 100 something. So we got a headline that the G7, if on the far left here, we got a headline, G7 discussing joint SPR release. U.S. officials believe a joint release in the range of 300 million to 400 million barrels, or 25 to 30% of the 1.2 billion barrels in the reserve would be appropriate. Okay, that started to bring the oil price down. Then, all of a sudden, breaking, G7 nations decide against releasing the SPR. Japan, though, says IEA recommends the G7 please release the SPR. And then we get a headline following that says Iran warns of $200 per barrel of oil if strikes on its infrastructure do not stop. Now you're starting to see the chess. Again, if I go back to this slide here, our SPR is in bad shape. It was depleted by Biden. It was never refueled. And this kind of goes back, screw the whole SPR this, SPR that. It's less about that for me, guys. It's more like this is all just a bunch of fiat games. You should, as a country, you should be productive. You should not just export printed money. You should not build a cascading Ponzi scheme of fiat dominoes all over the world that you need to rely on. You shouldn't run on perpetual debt. You can't expect to borrow money forever. It's all this is decades and decades and decades and decades of policy decisions that are coming home to roost. Okay? So we've got our SPR that's in trouble. We kind of make a bluff, the G7 does, to release some of those reserves, only to then, once the oil price starts to correct back down, then say, just kidding. And then Iran responds and say, oh, you're just kidding? Well, get ready for a $200 per barrel oil price if you're just kidding. And so now let's take a look. Let's get into more of the chess here. So that is my little weekend recap of where we are. Oil gapped up in a major way, and we're going to see how Iran is going to fight back. Iran, China, Russia, I don't think they want war. I don't think they want nuclear. Well, when I say war, Russia is clearly a war hog. I mean war with us. I don't think anyone wants to threaten nuclear. Like I've said before, I think China, it's Chinese culture almost to say, oh, okay, you guys are fighting with missiles. Well, we're just going to stop shipping you the rare earths. And that's it. Remember how fast Trump tacoed then? We can't build any defense materials. We can't build any local infrastructure. We tacoed immediately. And that's my expectation, is that Iran is going to say, okay, you guys want to fight? Well, $200 per barrel of oil. Go explain to the American people how you started a war and sparked levels of inflation they can't afford. And then also try and explain your bond market. And that's where we're going to get into the chess here. So this is what I call the pattern break. Every prior geopolitical shock sees bond yields fall. Okay? We're going to explain bond math one more time on this show. So bond math, guys, is very simple. If the demand for bonds goes down, the yield goes up. They're inversely correlated. If the yield is falling, that means the demand for bonds is rising. So they're inversely correlated. Why? Well, it's pretty simple. If I'm selling you a 10-year U.S. Treasury bond, okay, and I'm saying I will pay you 1 basis point of interest to lend to the United States over 10 years. If there's not enough demand for that Treasury bond, then the yield goes up. Well, what about 1%? What about 2%, 3%, 4%? And it's effectively the market's way of saying, I'm not getting paid enough to lend to the United States of America. You need to pay me a higher yield to solicit the demand required to sell this bond. Okay, does that make sense? And so what's traditionally happened during geopolitical shocks, is bonds have acted as a safe haven because everyone's risk on, betting on the newest technology, betting on who's the new Mark Zuckerberg, who's the new Google, who's the new Amazon, risk on, bet it all, bet the house. But if risk comes off and credit tightens and liquidity tightens, then the safe haven was to run into U.S. bonds. Because what's safer than getting your paycheck from the Federal Reserve effectively? They can't default. When in doubt, they can print the money. They're good for it. It's the United States, strongest country in the world, strongest economy in the world. We're good. And that's been the safe haven place to run. Look at the asset on the left. That red line is the Iran 2026. It's the only real time. The historical average is the shaded in blue. So this is abnormal what's happening, guys. This is not good. Yields are rising, which means demand for U.S. bonds is falling, not rising. As the U.S. is engaging in war, risks of inflation, AI deflationary tendencies, there's recessionary risks everywhere. No one is running into the U.S. debt markets for safety. That is really bad. That is really scary. What does it ultimately mean? What it ultimately means is the U.S. is too indebted. People don't want to store their value there anymore in the U.S. bond market. This is why gold has remonetized and reemerged. This is why we're building Bitcoin. For these moments, you're starting to see the very early cracks of what we've been talking about on the show all the time. If you were to tell someone 10 years ago that there would be war in the Middle East and bond yields would rise, they would say bullshit. But it makes all the sense in the world now. On the right, I have from Arthur Hayes, the MOVE Index. And we've talked about this before, but it's been a while. The MOVE Index measures bond volatility. The bond market, the United States bond market can't sustain volatility because in order to get people to buy it, they've allowed and enabled an immense amount of leverage. Okay, we've talked about how the largest buyers of U.S. bonds recently has been, U.S. Treasury has been Cayman Island hedge funds. So there are these hedge funds that are running a basis trade, an arbitrage trade, and they're levering themselves up times 1,000, times 1,000,000. They're basically making a penny every trade, but it's a really good business if you could lever a penny times 1,000,000,000, because then you're making a ton of money a day, right? And so you know what leverage can't sustain is volatility. When volatility hikes up and you're levered, well, you have to post more collateral. And that's where you get a lot of this cascading well, these hedge funds have to start selling equities, selling bonds to post collateral to sustain the leverage that they have on. And so when we see both bond yields higher and bond volatility higher, that is bad news. When I saw this, I thought to myself, oh boy, okay. Trump is engaged in a very serious poker match right now. And it's not clear to me we're going to win. Iran is basically saying we can sustain enough pain until your bond market collapses on itself and inflation drives the populace to basically riot you out of office. Like we will sustain the pain. And Trump is taking the opposite of that. He's saying, I can sustain the pain. I'm willing to sit and bet that you guys cannot wait this out. This is an absolute insane geopolitical match that, again, we're not in the Situation Room. We don't know what's being briefed. We'll never know. I cannot believe this seems very risky. So this from Luke, his point here is Iran. So 10-year yields are in blue, okay, rising. USD JPY, oil, red. USD CNY, oil, green. Here's the point. They're all going up, okay? He said, since Japan lifted yield curve control on 10-year JGBs. And the title of his newsletter this week was, Iran doesn't have to beat the U.S. military. It just has to beat the U.S. Treasury market. And that's the point here, guys. That's the chess that's being played. The U.S. is so indebted. It's almost at $40 trillion of debt. Interest rates are high. 10-year yields are high. It has no cheap way to borrow anymore. It's reached a dead end. It can't afford to pay the interest anymore. Trump's always saying, why is the United States paying the highest interest in the world? We should be paying the lowest. We can't afford it. It would if Sleepy it's not Sleepy Joe Biden. If Jerome Powell, what's Jerome Powell's nickname for Trump? Whatever. If idiot Jerome Powell were to lower the interest rates, it would save the U.S. hundreds of billions of dollars. He's just talking about their interest payments on the debt. The U.S. can't afford to borrow anymore. And so Iran is engaging in not nuclear. They're engaging in financial warfare. They're saying, we're going to close the Strait of Hormuz. We're going to jack up your energy prices. We're going to cause inflation on the populace. And we're going to collapse your bond market. Why? And again, just to be clear, because sometimes people come to my show and are looking for really basic 101 information on how markets work. Why would inflation crash the bond market? The reason for this, guys, is that the higher inflation, the higher I need to be compensated to lend you money. If inflation is 10% and the bond yield is 5%, I'm getting ripped off because my eggs, my housing, my gas prices are getting 10% more expensive, but you're only paying me 5%. So you're ripping me off. At a baseline, I should be compensated for inflation. And in theory, I should actually be compensated more than that too, because whatever the U.S. economy is growing by, like it's growing because I'm lending you the money, like I'm fueling the growth. So, bond markets in theory are some combination of whatever, inflation and/or growth, right? GDP. So by oil going up, which causes inflation, serious inflation via, right at the source, energy prices, which will threaten the bond market. And historically, the U.S. has been able to avoid this because they're not so indebted. They're not so fiscally broke. They haven't just been printing and printing and printing and indebted and indebted and indebted and needing lenders. But that's where we are today. Like when I say we are approaching a sovereign debt crisis, this is a sovereign debt crisis. This is like the United States can't afford this any longer. And what you're seeing is Oil prices going up is causing the bond market yields to go up, not down, because it's not a safe haven. Investors are saying, shit, if Iran's going to keep jacking oil prices up, yields can't be 4%. They got to be 5%. They got to be 6%. They got to be 7%. But the problem is the U.S. can't pay interest on that. They literally can't afford it. So what do? What do? That's the chess that's being played. I don't see the win-win-win outcome here. I really don't. I don't know how this ends without the U.S. being embarrassed, to be honest. And I don't want to, I mean, everyone, I'm American and I love this country, and if I didn't like it enough, I would have left. I'm not going anywhere. But you guys listening to the show, you need to understand the chess that's being played right now. It's serious. Okay. So more on the fiscal math. So we're not quite at 40 trillion. We're at $38.8 trillion of federal debt. Our debt to GDP is well over 100%, sitting at a mere 122%. And our deficit to GDP is 6%. That's insane, guys. Meanwhile, over the weekend, Trump said he may need to lift the military budget from $1 trillion a year to $1.5 trillion. So the spending can't stop. And this is why I've said the only way I see out of this is some form of yield curve control. Where yield curve control, for those that don't know, is if the United States can't find buyers of its bonds. Again, buyers of its bonds are just lenders. When I buy a bond, I'm lending money to the U.S. government, and the yield I'm getting is the interest they're paying. If there's no more buyers of U.S. bonds, then what happens is the Federal Reserve just prints money and lends it to the U.S. and buys the bonds. And that's called yield curve control because you are controlling the yield. You are capping the yield. You are saying the yield cannot go to 5 or to 6 or to 7 because the U.S. can't afford it. So if there isn't enough demand, the Federal Reserve will print the difference and make the demand. That is the end game. That's just literally you're printing money to borrow money in a perpetual loop. That's the sovereign debt crisis. That's it. That's GG's. That's good game. Tip your king, resign. And that's where you get a more serious version of defaulting via inflation. Because the amount of dollars that are going to need to be printed to sustain these level of deficits, this level of military budget is immense. You are going to get direct inflationary forces to the face. And that's where you see something like Bitcoin and gold. These things are going to screech. Like people talk about God candles, Bitcoin going up $100,000 in a day. It would be on days like that, like announcing yield curve control programs. And that's the only way I see this. That's why you stay humble, you stack sats, you turn on your DCAs right now. It could get a lot uglier in the near term. If oil does go to 200, if Trump really tries to push this, and risk can sell off violently. Violently. But over the medium to long term, there's no way out. They have to print the money. And this is only expediting the reality. So I found this tweet from Peruvian Bull. I've listened to him on Marty's show a few times. Really good insights. I like his stuff. So he kind of described this Japanese doom loop. So he says, Japan can't absorb this. Every dollar higher in crude oil is a direct tax on their entire economy. Energy costs spike, import bills explode, the trade deficit widens, and the yen weakens further, which makes the energy imports even more expensive. So you guys see how this is kind of like a loop. It's a doom loop. Weak yen makes oil more expensive in yen terms, which worsens the trade deficit, which makes the yen weaken further, which makes the oil more expensive, which worsens the deficit, which weakens the yen, goes on, goes on, goes on, goes on. If oil stays above $90 and the strait stays shut, the Bank of Japan has to choose between defending the yen, which is hiking rates, blowing up the JGB market and the carry trade, or letting it crash. And so again, guys, it's all one giant Ponzi scheme of dominoes. If Japan can't sustain this, by de facto, the U.S. can't sustain this. Because guess what? When Japan starts to face the heat, what do they sell? They sell U.S. stocks. They sell U.S. treasuries. They sell U.S. Treasuries, what goes up? When bond demand falls, yields go up. Yield goes up, what goes up? U.S. interest payments. It's all one connected tissue of Ponzi. So when people do not appreciate, when Trump says, I can sustain this pain, it doesn't matter what you can do. It's what can the fiat system sustain? This immoral, unethical, giant Ponzi scheme that's been created over the last decades. So what's the collateral damage? Foreign holders need dollars, so they're selling everything to get the dollars. Look at this last night. South Korea's Kospi falls more than 6%. Japan's Nikkei falls over 5.5%. This is not a drill, guys. What I'm saying is not theory. It's facts. It's facts. No bueno. Not good. And weirdly, everyone in markets is starting to draw echoes of 2008. So first and foremost, BlackRock limited withdrawals from one of its flagship private credit funds. That's bad. More stress in the private credit market. And it's not from names you've never heard of. It's from BlackRock. That is not good. On top of that, Joe from Bloomberg and Kelly from CNBC both wrote independent newsletters that this macro environment is giving them flashbacks to 2008. High oil prices, bad job prints, stressed liquidity. Not good. Not good. On top of that, this is a central banker's worst nightmare, because in the midst of all of this, while all of this is going on, the change in non-farm payrolls missed by a long mile. The expectation was 55K and it got negative 92K. And so it's a central banker's worst nightmare. Why? Well, on one end, you have inflation coming because oil price is surging, energy is surging, and everyone's eggs, housing, everything is going to get more expensive if this keeps up. On the other hand, you have job destruction and deflationary pressures. Payrolls are crashing. People are going to be left unemployed. So how do you fight the AI deflationary pressure? You print money. How do you fight oil surging and the inflationary pressure? You hike interest rates. Uh-oh. Pick one. It's a lose-lose situation. Again, guys, we've reached the end of the road. Now, I'm not going to sit here on the show and say, oh, it's over. By the time you wake up tomorrow, the world's going to be on fire. That's not what I'm saying. I'm saying there's no clean way out. How long it's going to take and how it's going to happen, I don't care to speculate on that. I spend my time doing productive things. Spend my time working on Bitcoin, building my businesses, building family, enjoying time with friends. I'm not going to spend my time guessing on when the system's going to collapse. It'll collapse when it collapses, and I'll have all the Bitcoin to protect myself from that. All right. But my point is, like, the chessboard is very clear. It's very obvious. There's no path to walk. There's no can to kick. So the question in this giant chess game that we're playing, as Luke very eloquently points out, both in his newsletter and on Twitter, is who breaks first? The game between the U.S. and Iran/Russia/China, so the West versus the East. The game is who breaks first. So this tweet from Luke here on the right, U.S. and Israel are claiming that Iran is out of missiles with warheads lighter than 1 ton. Iran is claiming that Israel is out of interceptor missiles. So Luke writes, high-stakes poker to find out who has been bluffing about missile capabilities and who hasn't. I'm not going to lie. I'm nervous. Yes, we're the United States. Yes, we're the greatest country in the world. Yes, we're the land of the free. But we have hollowed out our industrial base over the decades. Trump just had all the war defense companies come talk to him and say, you better produce as fast as you possibly can. And their reaction was, the only way we can do that is getting quicker shipment in from China. We don't have rare earths here. We can't produce shit without reliance on other people. So I'm a little nervous that we're in a game of poker right now of who's bluffing harder, who actually can produce interceptors and missiles, because I don't think the West wants that smoke. I don't think we want that beef. So this is Luke's most likely order of events on the left. He thinks the U.S. Treasury market will dysfunction first. The U.S. will run out of interceptor missiles first. Israel and the U.S. military assets are going to get crushed. And China and Iran will actually outlast this. The question is, can China hold its ground in regards to oil? Like, does it have enough and sufficient access to oil and oil inventory? And can Iran continue to produce weaponry and not run out of missiles? And can they do that before or after the U.S. Treasury market dysfunctions and the U.S. runs out of production? That's the game of poker we're in. Now, again, why we are in this, I don't know. I'm not in the Situation Room. I'm not briefed on why the fuck we decided to do this. I'll get into it in Grind My Gears. I'm going to go off in Grind My Gears on this very topic, so I'll save it for that. But it doesn't make any sense to me, and I'm not going to lie, it's slightly concerning. I mean, to see Scott Bessent unsanctioned Russian oil is like, wow. That is, I mean, shit must be real bad. So that brings us to these new monetary regimes. So I want to talk a little bit. So Michael Howell, that's another researcher that I've subscribed to, really good stuff. He's got this really interesting insight that the gold run has been fueled by China. And you guys should go check out his stuff to read more into it. But the way I would summarize it is China is printing a ton of money right now. They're devaluing their currency a lot, the yuan. And it seems to be devaluing directly against gold. And we know that the United States' second largest export in 2025 was non-monetary gold. Look at this. In the black is PBOC liquidity, and the orange is gold's price. The PBOC has injected over $1 trillion in the last 12 months. And the idea is that, and we've heard people, there's suspicions that China is basically building gold-backed currency. And we know that the U.S. is working on, stable coins. This is just me speculating. I expect Bitcoin to become more of a geopolitical tool soon. I really do. There was something from the U.S. Treasury. Hold on. Let me try and pull this up for you guys real quick. I should have included it in here. Hold on. Yeah, this. Look at this, guys. So this is new. The United States Department of the Treasury admits crypto mixers have legitimate privacy uses on public blockchains, basically advocating for privacy technology for Bitcoin. Why would they do that? Well, when you read a lot of the research from the government on Bitcoin, and you hear people like Ray Dalio talk, one of the critiques is that Bitcoin actually isn't private enough for nation states. Like, no one truly knows how China's using gold and how much they have because there's no blockchain. And so one of the critiques is like people are able to track. Now, for us savvy Bitcoiners, we know how to use Bitcoin privately. We know how to use the Lightning Network. The U.S. government hasn't gotten that far yet. But to see them say, wait, privacy Bitcoin is actually a good thing. I've kind of described this in the past. My best guess at how the world evolves is that China is going to go gold and go heavy CCP, obviously. And the West is going to fall back on the internet. What is the internet? The internet is AI, social media, and Bitcoin. The internet's money is Bitcoin. The internet's monetary policy is Bitcoin. The internet's intelligence is AI. And the internet's networking is social media. And you'll have these two worlds fight each other. And one is distributed and fair and equitable and moral, and the other is more authoritarian and analog. And I think those are the two frontiers that the world will battle for the decades to come. That's because, and I've given this speech before, actually in Washington, D.C., but I think Bitcoin is more American than the dollar itself. Everyone's treated equally. There's freedom of speech. There's property rights. Like, the internet is more West than the West. It is the house on the hill. It is the promised land. It is where everyone is now migrating to. Everyone knows, like, the Statue of Liberty, the United States. Everyone was migrating to the United States. Why? They wanted opportunity. They wanted hope. They wanted property rights. They wanted freedom of speech. They wanted, that's why everyone's migrating to Bitcoin. Everyone's migrating to Bitcoin for hope, for property rights, for freedom of speech. It's why they're migrating to AI. So I think that this is the future frontier to be fought. And these are very clearly the monetary systems being built. And, I think us Americans and entrepreneurs and open source developers and such, we have to continue to hold the line and build the world we want to live in. I do not want to live in a CCP-driven, gold-backed yuan. Fuck that. And that will be the frontier to be fought. The frontier to be fought, to be clear, will be this: are kids in China going to wish they were part of the free and open web, which they're not allowed to, right? Like, China has controlled internet. Are they going to wish they had access to open source software? Are they going to wish they had access to Bitcoin, to AI models, to all of our social networking and tooling? Or are my kids going to wish that they were that they got to grow up under the CCP? That's the frontier to fight right there. And so how do we win that? How do we further Western ideals? We keep building, man. We keep building Bitcoin. We keep stacking sats. We buy their dips. Everyone on Wall Street right now that's over-levered, getting margin called, puking their guts out, we buy their dips. We keep building. We don't get distracted. Like, guys, like, no bullshit. Like, enough with the, like, Dogecoin and the fucking Solana. Like, these are not serious technologies to solve serious problems. So we don't waste our time with that nonsense. We don't get distracted, and we build the digital frontier that's going to protect the Western ideals. And this is where I think the world is going. So just a few last things on here before we get into grind my gears. I wanted to just make this slide called Not So Fast. When I made this slide, Bitcoin was rallying a lot. Like, Bitcoin was up like 10% in a day, and everyone was like, let's go, bear market's over. It might be. I don't know. Okay, listen, I don't know. What I've been saying is turn on your DCAs. It's not going to get much lower for much longer than this. You're not going to regret this price in a few years. Turn on your DCAs, but it could. And if you look at the fundamentals, this is BTC USD and the software ETF. Like, this is Bitcoin and software. They're still directly correlated. So Bitcoin popped because software popped. If Bitcoin was starting to move against other things in a really strong way, now we'd be talking. And it's shown a little bit of life there, but not enough for me. So that's why I'm just saying, just be careful, guys. Be really careful. Because if it comes out that this war is going to go all the way until the winter, that oil is going to hit 200, and that Trump and this administration has engaged in very serious high-stakes poker, and it's not really clear how this is going to end, things could sell off in a major way. In a major, major way. It might not. I don't know, right? Who am I? I have no idea. But just be careful, okay? Be careful. Bitcoin popped because software popped, and we all know what's going on there. We've been through that. But with that being said, turn on your DCA. So again, more things I look at, more signs. Bitcoin perpetual future funding rates. People are starting to short the bottom. Okay? That's signs of shorting the bottom. Always tell me we are near a bottom. Doesn't mean we're at the bottom. We're near a bottom. And again, every type of power law, every type of long trajectory price formula for Bitcoin tells me that they're like statistically, it's a good time to buy. Statistically, there are few days, according to history, that Bitcoin is relatively lower than it is now. And you have to remove the expectation that you're going to buy the Pico bottom. You're not. It's probably going to happen while you're sleeping. It's probably going to happen while you're driving. It's probably going to happen while you're in the shower, right? Like, that's not the point. I'm not the best trader. That's not who I am. That's not what I'm good at. Nor is that what I want to be good at, to be frank. Some people want to be good at that, and, all the power to them. I don't. I want to build products. I want to build great companies. I want to make a difference in the world through innovating. And so that's what I spend my time on. So I just DCA. Get my paychecks in Bitcoin, use my line of credit. So turn on the DCA. All right. Grinds my gears time. I know we're about an hour into the show, but I got time today. So no worries. Let me take a sip of espresso and get myself fired up here because, these people think we're fucking stupid, man. All right. You know what really grinds my gears? This is from Donald Trump. He tweets over the weekend, short-term pain, long-term gain. He says short-term oil prices, which will drop rapidly when the destruction of the Iran nuclear threat is over, is a very small price to pay for USA and world safety and peace. Only fools would think differently. I'm going to read and dissect this one more time. Short-term oil prices, which will drop rapidly when the destruction of Iran nuclear threat. What is the President of the United States saying in plain English? This is about Iran's nuclear threat, and he's saying short-term pain for long-term gain. Wait till I show you. You cannot make this shit up. Hold on. Let me pull up the video. All right. Now, I need you guys to watch this video of the news media. It'll speak for itself. Take a listen.
This is a short-term disruption for the long-term gain.
Short-term pain for the long-term gain.
Short-term pain be for long-term gain.
We're going to have some short-term pain with long-term gain.
Short-term pay for a long-term gain.
Some short-term pain, yes, but we've got some long-term gain. Short-term spike for a long-term gain.
Some short-term pain for American consumers.
We may have to deal with that in the short term.
Short-term and temporary.
Temporary short-term pain.
It's going to suck in the short term.
Some short-term pain.
Short-term pain. We have to focus on the short-term.
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 Short-term and long-term.
Short-term blip.
Hopefully this is a short-term pain.
Short-term is highly outweighed of the long-term benefit.
Some short-term pain for the long-term gain.
Short-term sacrifice for a long-term gain.
These people think we're fucking stupid. Short-term pain, long-term gain. It's gotta be a short-term pain. Shut the fuck up. Shut the fuck up. This is the most dystopian, disgusting. Guys, wake up. We are living in the most dystopian, disgusting times. Literally, the U.S. government is funneling in hypnotic messaging to hypnotize the people through the media. They get on, wait, why the fuck are we in a war in the Middle East? Why are we playing such high-stakes geopolitical poker? Why are we causing potentially immense levels of inflation against an already deflationary threat in AI? What the fuck are we doing? It's a short-term pain for long-term gain. Shut the fuck up. These people think you're stupid. Make no mistake about it. These people think you're dumb. They think you're a dumb, white-collar novice that's going to turn on the news, short-term pain, long-term gain, and go to your job with your button-up and your tie and your duffel bag and click-clack on a keyboard all day and hate your life and go home and take a bunch of pills and supplement yourself with booze and with marijuana. They think you're dumb. They think you're soulless. Because let me show you guys something. This was a press release from the White House on January 25th, 2025, less than 1 year ago. The press release from the White House reads, Iran's nuclear facilities have been obliterated and suggestions otherwise are fake news. Does anyone not remember that less than a year ago, we dropped bombs on Iran and supposedly obliterated their nuclear facilities? Do you guys remember that? Am I taking fucking crazy pills? But the president of my country then tweets out that this is short-term pain until we destroy their nuclear threat. But I thought we just destroyed it in June of last year. How stupid do these people think I am? They're not even trying anymore. The White House, the president, the U.S. government literally issued a press release from their own website that said they obliterated the Iran nuclear weaponry and anything stating otherwise was fake. That same government is telling the media, short-term pain, long-term gain, short-term pain, long-term gain, until we destroy their nuclear weaponry. These people think I'm fucking stupid. They think I'm a lab rat. I'm a white-collar junkie. So you know what really grinds my gears? Everything about this disgusting system. The government's too big. The money's too broken. It's fucking pathetic. I mean, who can watch what I'm presenting right now and defend any of this? The media is a hypnotized, broken record. The president is violating the very thing he promised to the people in June of last year. What the fuck are we talking about? How is this a debate? Meanwhile, Trump's talking about like he may start a draft and send Americans into war. Dude, you know what really grinds my gear? All of these people think we are fucking stupid. They think we're stupid. And that's why I said last week, what can I do about it? Am I going to pick up a weapon? Am I going to go protest violently? No, never. I'm going to build open source software. I'm going to buy Bitcoin. I'm out. I'm out. Two ways to express yourself in this world: voice and exit. My voice doesn't matter anymore. No one's does. Nobody wanted to go to the Middle East and go to war. Nobody wants $200 per barrel of oil. Nobody wants any of this shit. It didn't matter what we said or what we want. Okay, fine. I'm out. I own no dollars. None of my time and energy goes towards supporting any of this nonsense, any of this short-term pain, long-term gain. You know, we just need a little bit more short-term pain so we can have the greatest long-term gain. Shut the fuck up. These people think I'm fucking stupid. I couldn't believe, I swear to God, I said, hold on a second. Didn't the White House just issue a press release? It felt like yesterday when we flew over Iran, dropped a few missiles that destroyed all their nuclear capabilities, and we came out and we celebrated it as like the most tactical and efficient strike. It took us like less than a day. It was in the middle of the night. They never saw it coming. And Trump said, we destroyed all their nuclear stuff. Fast forward like 9 months, and we need short-term pain, which doesn't seem very short-term, by the way, to do what you already said you did. How fucking stupid do you think I am? It's so insulting. Because it's so insulting. Because, God damn. Because obesity rates are up, metabolic disease is up, cancer rates are up, suicide rates are up, drug abuse is up. Because the population is struggling from these very same policies. These are policy decisions. Perpetual inflation, perpetual debt, perpetual war. These are policy decisions made by these people. How fucking dumb do you think I am? So I'm going to spend my time doing podcasts, tweeting, building companies to make sure people understand they should never buy a U.S. bond, ever. They should never hold fiat any more than they absolutely have to. It's disgusting and pathetic. These people are pathetic. Pathetic. And by the way, obviously don't trust the media. Obviously build your own opinions. Now you see very clearly that a lot of this is narrative driven. Fucking pathetic. That's what grinds my gears. Ridiculous. All right. Let's cool down a little bit and talk about Strike. Just a reminder that we launched our line of credit product. So what is the line of credit? It's like a HELOC, but for your Bitcoin. So in my opinion, it's one of the most exciting innovations in Bitcoin in a while, at least for me. Again, let me remind you guys, I don't like building anything that I don't use myself. I truly believe the best products are built by people that are a customer as well. Let me tell you guys a story about this, actually. I've been having some issues in my house with my lighting, like my electrical setup, I guess, or something. I don't really understand it. But the UI on like how the lights work in my house is awful. Like, you guys remember when a light used to just be an on and off switch and you'd flip it up to turn the light on and you'd flip it down to turn the light off? It was it was so well designed. It was so easy. It was so intuitive. It didn't need an instruction manual. I didn't need to take a picture and plug it into ChatGPT and explain it to me. It was super fucking simple. I flip the light up to go on. I flip the switch down to go off. And if I flip it and it doesn't go on, that means the light's out. It was super fucking easy. Nowadays, you've got these panels of lights and there's different, there's buttons all over the place. And I give you this context and this example because there's no way whoever built this new light system for my house has this installed in their house. No one would build this product if they had to use it themselves. It's a shitty product. It doesn't make any fucking sense. There's instruction manuals and all this stuff. I just need to turn my lights on when I need to see, and I need to turn my lights off when I go to bed. I don't need it to be any fancier than that. It just needs to work. And so anyways, I think products are best when they're built by people that experience the problems themselves and that use the products they build. I think they're bad products when people create products for the sake of having a business. Like someone created like the fancier light company that's selling light packages to my building. Like no one practically uses this product. No one like thought this was a better product than the light switch. And so anyways, I build products that I use. And I built this product because I needed this product. I don't want to own fiat. I want to live on Bitcoin. But how do I do that? The way I do that is by a Bitcoin line of credit, where I buy Bitcoin with my paychecks. I buy Bitcoin with my savings. I keep a portion of it on Strike. When I go to pay my bills on Strike, when I go to do I have an HOA, I have an electricity bill, I have credit card bills, I live my life, whatever, credit cards, housing expenses, it's all hooked up to Strike through my account and routing number. And then when the bill comes in, Strike extends a little line of credit and basically lends me the fiat to cover the bill. And then when my paycheck comes in, if my LTV is in a position where I need to pay the line of credit down a little bit and keep it healthy, then I allocate some of my paycheck to the line of credit. If not, I just stack sats. It's that simple. And so this is like an effortless and easy way to live on Bitcoin and effectively short fiat, speculatively attack fiat with Bitcoin. Because the Bitcoin lending products today are fine. Like the 12-month loan that we offer is a great product, but you need to be taking out a larger lump sum of cash over a year. It's not a product to necessarily live on Bitcoin effortlessly. Use that product to finance a wedding, to pay for a large medical expense, to put a down payment on a house. It's a large lump sum of cash all at once. The line of credit is like Strike has direct deposit, we have bill pay, and now we have a consumer credit line against your Bitcoin. So we complete the full loop. You can get paid, pay your bills, and get paid and pay your bills without owning fiat at all, with getting these small little credit lines against your Bitcoin. So this product is live in Georgia and in Massachusetts. We're going to enable it, hopefully across the entire America soon. I said this before. This product is really personal to me. I care a lot about it. I want it to be perfect. We wanted to do a little bit of testing. Massachusetts and Georgia for us were for other reasons that aren't worth explaining. We have customers that were already there that already knew we were building this and asked if they could use it first. And so we enabled it there first just for testing purposes. So we're going to test it a little bit. So far, it's working really, really well. I love the product myself. And then, I would say as soon as the testing goes well, we'll just unleash it everywhere. So if you guys have feedback, if you have questions, please ask. I'll answer here. We'll answer in support. And if you want access, let us know as well. We're just trying to collect as much information as we possibly can so that we can perfect the product and get it out to you guys. Then the other thing about Strike is we got our BIT license. So it's official. We got our BIT license. We issued our press release. That's now official news, co-signed by the NYDFS. Strike is live in New York. The party. So this is the merch I'll be handing out in New York. This I Love New York shirt, Strike style. We'll be handing out free merch, drinks on us at PubKey. March 17th. So it's a week from tomorrow. I'll be there. A lot of the Strike team will be there. I think I'm doing a fireside chat with someone. So there'll be a little bit. I think it would be, I told Dylan, I think it'd be cool if we did like some version of JMS in person, like at least the Q&A. Like if you guys have questions about our products or about 21, or you ask me whatever you want, and we'll be there. It's actually coincidentally St. Patrick's Day, so I'll have a Guinness and we'll do some live Q&A and we'll hang out. I think the only fear is that supposedly PubKey can only fit like 100 people and or something like that, maybe a little more. And I'm worried that we're going to attract way more than 100 people because you don't need to like buy a ticket or anything. I just want you guys to show up. And so I actually pinged Dylan and I said, dude, I wonder if PubKey can allow us to drink some beers out in the front of the bar, like spill out almost like patio style. Because what would be really badass to me, because people were floating ideas like, well, should we require people to buy tickets? Should we make it like a little bit exclusive, like you need an invite? And I was like, no, fuck that. That's so not me and so not Strike and so not Bitcoin. Like it should just be like, show up, drinks on me for one day. I've been trying to get this license for years. I've been working on Bitcoin for years. It's because of you guys that my business is profitable and we can afford an event like this. And it's your support that allows me to wake up and, I have my dream job and I feel very fortunate. And I also feel a very serious responsibility to you guys to, do the right thing and build the right products and have the right focus. So it'd just be a fun moment and everyone should show up. If it gets too crowded and then it is what it is, fuck it. Like that, I think that'd be cool. And hopefully, I don't know, maybe there's a bar next door we can rent or maybe we can drink outside. But whatever, you guys should all come. Seriously, just show up. As I'm talking now, no ticket required, nothing, drinks on me. And I only have so much merch. I can't print merch like the Fed can print dollars. So obviously it'll be first come, first serve for the merch if you want. I think we've got a shirt and some coasters or something. I don't know, whatever. But just show up, come give me a hug. We'll shoot the shit. We'll have some live Q&A, and we'll all hang out. We'll all hang out and turn on our DCAs and have a good time. So I'm looking forward to seeing you guys, and thanks for all the support. Let's make it an all-time high PubKey event. Let's make it like the most highly attended PubKey has ever been. That'd be awesome. I think that'd be badass. Some of my team was like, dude, I'm really nervous about that. I was like, no, opposite reaction. That'd be the coolest shit ever. That'd be awesome. So that's my goal. Spread the word. I think all of our like promotional assets get in from the team tomorrow. So I'll start tweeting all this stuff out and promoting it through my socials tomorrow. And I fly in next week. So I'll be in New York next week, Tuesday, March 17th. And then on 21, some of you guys wrote in the comments that you didn't know what non-public information was. So I'm just going to repeat it again. For 21, some people want to just be upset. And I get that. Totally understand that. I'm being genuine. I'm not being facetious. I totally understand that. And I'm the guy. Being the CEO is like buck stops here. Like you want to be upset at someone, you're allowed to be upset at me. And I own that wholeheartedly. It's been a tough market for a lot of us Bitcoin companies. It's been tough sledding, no doubt. If I could rewind time, would I do some stuff differently? 100%, no doubt. Maybe one day I walk you guys through a little behind the scenes of everything that went on and all this stuff. And maybe there'll be time for that where I feel that's appropriate. But all that to say, some people want to be upset. Be upset. I own that. Some people, though, are genuinely interested on like, hey, dude, you're a really transparent, approachable guy. Why are you not being that transparent with 21? And the answer I gave last week was, and I want to expand on a little bit here, there's something called NPI, non-public information. As a public company officer, if I know something that the public doesn't, that could be impactful to the future of the business, I'm not actually allowed to talk about it. I'm also not even allowed to implement a stock buyback. People say, man, 21's trading at a discount to its NAV. If you believed it was really discounted, you'd be buying stock personally, or the company would be buying its own stock. Trust me, if I was allowed to, I would. But when there is non-public information, then we're very restricted in what we can do. And so what I've been saying and what I'll continue to say is that 21 is engaging in some interesting opportunities that we think would be really, really great. And our goal has always been to be the Bitcoin company and combine a large Bitcoin treasury with a large Bitcoin operating business. Like, we want to build products. We want to build tools. We want to advance Bitcoin adoption. We want high margins and high cash flow. And like that, it doesn't mean that other Bitcoin treasury strategies are bad. It's just, we want, like I said, I like building products I use. I like building tools that advance my mission, the things I believe in, the world I want to live in. And that's who we want to be as a company. And so we're exploring opportunities that would put us in that position and advance us towards that goal. And because we are in the middle of exploring those opportunities, I'm not allowed to buy stock. I'm not allowed to tell you guys any more than I am right now. And those are just the law. And if I were to violate the law, obviously I'd get in trouble. But more importantly, I wouldn't progress us towards where we all want to go if you're interested in 21 and in its success. So the best thing to do for the company is for us to continue to do the work. And at the end of the day, everything always comes down to proof of work, right? Like, we're either going to build a great company or we're not. And we think for the long term. Tether and I have an extremely low time preference. We're very excited about this company. Obviously, it's been an interesting start, but it's okay. And the only thing we can do is learn from some stuff that we would have done differently and be better. And that's what we're doing. And that's all I can say. So for those that want to be mad at me, that's not going to change. This information is not going to change how you feel. And you have a right to feel however you want to feel. It's your emotions. They aren't mine. And, I'm the CEO. You can yell at me. That's okay. If you are genuinely curious, like, wow, Jack feels like a little bit more timid or a little bit more restricted, that's why. It's not a strategic thing by me. It's not a tactical thing. I'm not hiding from anything. It's just the rules. And when I'm allowed to talk, like, Strike's a private company that I control outright. Like, no one can tell me what to do. It's my company. 21 is a public company. When you're a public company, your company is literally for sale every single day during the market hours. So, it's not just yours, it's the public's, like you share it. And so there are all sorts of rules you have to abide by. And so when I'm allowed to tell you guys more about like all that goes into launching a public company, why certain things happen, why I made certain decisions, I'd love to do that. Right now it's not appropriate. And so we're just going to do the proof of work. And, one day I hope to share all that with you guys because I think why not? I believe in the transparency and in the information sharing. I think it's healthy. But yeah, for now, we're just going to build and work towards this common goal I've outlined fairly clearly, which is a Bitcoin treasury company and a Bitcoin operating company all in one roof. Dylan just said, we're definitely going to ticket the event in New York or else it will be mayhem. Well, you guys know how I feel. I would rather do no ticket, just like come one, come all, let's burn the place down. Although, like, I love the PubKey guys. I love Thomas. I don't actually want to burn this place down. Please don't actually do that. It was a metaphor. But let's just raise the roof of the joint. Who knows? Maybe they have to implement a ticketing process to protect the capacity. I don't know. I'm not trying to get anyone in trouble. I just think it would be awesome if we had like a block party in New York. I just don't know if we're allowed to. I don't know how the rules work. But if Bitcoiners just showed up in a major way, like if like 500 Bitcoiners showed up and we just took over a block in New York City and all had Guinnesses for St. Patrick's Day and just like chatted about Bitcoin, that would be the dream for me. We'll see if we can make it happen. I'll keep you guys posted. I don't know. Fight, man of the people, they say. That's what they say, man of the people. All right, let's do some Q&A. I got time today. Longer episode, but you guys like the long episodes, so we'll keep them long. Let me pull up the Q&A doc. As a reminder, Dylan hangs out in the chat with you guys, and as you ask questions, he's writing them down. And we also even have integrated our head of product in the president of Strike. She is in the doc. Whenever you guys are asking questions about the product, I get her help answering it. So I see some of her notes in here too. So you can ask me macro questions. You can ask me investing questions. You can ask me Strike questions. And we get them all answered. Okay, we'll start with macro. Jack, in your opinion, are the problems showing up in the private credit sector going to be a contagion for the broader economy? Yeah. Well, I think all of this is the same. It's all the same story. So let's say something blew up today. Would we all point to the problems in the private credit sector? Probably. But would we also point to AI? Probably. Would we also probably point to Iran? Probably. So I think they're all pointing to the same resolution. Like they're going to have to print a ton of money, no matter how you slice it. So yeah, I would say yeah, the private credit sector stuff is not good. It's a symptom of this larger problem, no doubt. Question for both of you, leveraging AI. When it does analysis for you, making slides, etc., how much do you trust the output and spend time sifting through the data it pulls, etc.? So I'll show you guys, actually. Oh, also, I should probably make myself bigger here. Hello. But I will make myself smaller just to show you guys how I use AI. So I'll give you guys a little live walkthrough. So the way that this show works. So here's my recommendation of how to use AI. So I build tools that make myself more efficient. I don't outsource my artistry, I guess, if that makes sense. I've talked before that I think AI makes the artist better. And it disintermediates the white collar worker. So let me just explain. So I built this tool called JMS Resources, which I drag and drop so I'm taking screenshots on the internet, right? Like I've got all the stuff I presented to you guys today. So let's see. I'll take a screenshot of this and I'll upload it to here. So I drag it, drop it here. The source is localhost 8,000. And then the notes, I'll say testing. And I upload it, and it's sitting here. And then I'm able to talk to my AI and say, hey, this is how I'm thinking about the outline of the show. These are the chapters I want to cover. This is the story. And I have built as well, like my AI is able to cover like a skeleton. Like, so when I say like, hey, new JMS show, it pulls up the same opening slide template. So it pulls up, let's go back. It generates this slide, except it'll make it go from 108 to 109. It pulls in the date that I want. And then it pulls in like I do chapters and there's content slides. Like all my slides have the same design. And then I upload all the resources that I want in here. And I am able to link the sources and any notes and stuff. And then it helps me build it out. And then once I do build it out, this is also an app. This is not like PowerPoint. So what do I mean by that? It will generate this stuff, but if it makes a mistake, I'm able to go in here and click and edit it. So oil bonds and Bitcoin, motherfucker. And I edit it and I click out and boom, saved. And so I built all this software. So I'm not outsourcing the knowledge. What I am doing though is what I used to have to do is I would take screenshots of everything. I would need to open it all up in a browser. It would crash my browser. This just makes me a better artist at conveying my ideas and my thoughts. And what I use AI for is I build myself tooling to make myself more efficient and help myself express my ideas. But I go in here and I edit all this stuff. So this is all editable text. And so it's actually a really pleasurable experience for me, because I take all of my ideas, I upload them into my own tool. I talk to the AI, say like, I think this is the outline and the ordering. This is what makes sense. And then it produces it for me in like 30 seconds. And then I go through it and I type in and I edit it and I go back and forth with it. And then I hit live stream and I talk to you guys. So yeah, I mean, it's incredible. And I mean, as a reminder, I built live on bitcoin.jackmallers.com. This was AI. Same thing. I built this with AI. So the really interesting thing with AI is actually, you're limited by your imagination. You're limited by your creativity. You're limited by your ability to articulate and express. You know, when people say like, who's the smartest person you've ever met? You know, what people think is smart is like, oh, well, I have a friend that went to Harvard and got a 4.0 and works at Goldman Sachs. Yeah, but what we've learned is that AI can actually do that. And so that's not the hard part. The hard part is the like human element of, well, can you have a vision and articulate that vision in a way that allows other people to understand the vision? And can you lead other people in a way that allows the vision to become reality? Now that to me is the artistry of being human. AI's never going to be good at that. AI has no taste. It has no touch. It has no character, right? These are all the things I talk about all the time that I pride myself on. These are the intangibles of being human. And so with AI, it's totally flipped of like, how good of a programmer are you? How good of an accountant are you? Well, when the marginal cost of intelligence, of software, of accounting, when the marginal cost of all of that is zero or as close to zero as possible, what are the limitations? What are the physical limitations? The physical limitations are how imaginative are you? How much of a visionary are you? How many ideas do you have? How easy can you express and articulate those ideas? How good of taste and touch do you have? That is what matters. Does that make sense? So I use AI, like AI went from, you know, like, man, work is a slog and I can't wait to get off work, to like, I can't stop working. Like, I can't stop building stuff. Every time I talk to you guys, like, look at all these tools. I'm building new tools and new stuff that's like directly applicable. So now if we can go to jms.jackmallers.com/108. And this is the show that I just presented. You guys can go see my slides. And here you can click into the resources. So now all of you guys have access to all of the resources I collected over the last week. Cool, right? So I think AI changes the world in that way. And that's why I said I think AI will bring about an art renaissance, because humans will be left to their natural. I mean, we're creators. We're artists, really. And I don't mean literally like painting or making a song, although that too. I mean more like what I'm doing is artistry, in my opinion. You know, we'll be left to creating. We won't have to do the actual labor of making the things real. We'll be left with the labor of creating. And I think that'll be beautiful. And you have to pair that with good money too, because if you don't have a hard money that can actually make you future oriented, then creating is impossible. You can't create things like the Wright brothers were able to fly because they had gold under their mattress. That's like infamously part of their story, is they were able to save gold and say like, fuck it, let's try and fly, knowing that like we've got a little gold under our mattress. But when your future is uncertain because your money is not hard, well then humans become far less future oriented. You can't place a premium on your future. And so if you pair Bitcoin and AI, you get a future oriented species that can fully focus on creating. That's what I think we're embarking on. Personally. Who knows though? I'm wrong all the time. All right, let me blow myself up. You guys can see these big blue eyes. Dylan, question. With energy-backed finance returning, will Bitcoin be the global settlement layer, or will nation states build rival energy-backed money? I think Bitcoin will be the global settlement layer. I think Bitcoin's energy money. The competitor in that notion is gold. And gold has certain attributes in that it's more familiar and it's bigger. I mean, if Bitcoin were also a $30 trillion asset, it would be whipping gold's ass. Like, Bitcoin settles faster, easier to store. Like, it's better pound for pound. It's just not big enough. It's not well distributed enough yet. So gold has its advantages in that if there's an asset that is going to absorb the sovereign debt market today, like if we are basically saying government bonds are dead, long live gold. You can't move like all of the tens of trillions of dollars of government bonds into Bitcoin, or hundreds of trillions. Bitcoin's the size of Tesla right now. Is what it is. But I think eventually it will be Bitcoin. It's just going to take a little bit of time. Jack, how would you juggle stacking sats versus starting your own business? It's killing me not to be able to buy right now. I'm starting a plumbing business and I need the funds for that. I don't know, dude. I mean, you can obviously take out a loan. You could buy Bitcoin, borrow against it to fund your business, but that's leverage, right? And if something goes wrong with the business, you might find yourself in trouble. So, I'm not sure I have an answer for you, dude. I think it's up to you and your lifestyle and what you care about. How passionate are you about the business? How dire are you for cash flow versus the Bitcoin? That's something only you can answer. But I will say, cash flow, building a business that's profitable, which means you are a net producer to society, you're doing something productive for the world, that's the greatest asset along with Bitcoin. Because for one, you're making the world a better place. Having a profitable thing is literally making the world a better place. You are producing more value for the world than you're consuming from the world. So that's an awesome thing to create. I encourage everyone to do that. And then you can buy as much Bitcoin as you need with the cash flows. So, always be careful of leverage. Always be careful of positioning yourself as not a net producer. People say like, how do I live on Bitcoin with no income? Well, you're retired. There's definitely math to do there, but I always try and recommend people be a productive person, earn more than they spend. So I don't know if that was useful, but ultimately it's up to you, dude. Like, depends. If you were to say, oh, well, I'm in the middle of a divorce and I have 8 kids, and then the answer becomes more obvious. If you're like, well, I'm 21 and I'm in my mom's basement, I don't have much to lose, and I don't really like this business anyway, well, then the answer's obvious. So, it's up to you, man. It's up to you. Trust your gut. Hey, Jack, quick question. Isn't BTC the greater fool theory? It has 0 non-monetary utilities because you can only choose to hold it or pass it along to the next person. No. Oh man, you guys are baiting me with these questions. So, I would say, I'm looking at the clock. Do I spend 5 minutes ranting? The answer is yes. So, money doesn't need non-monetary uses. In fact, non-monetary uses that compete for monetary uses are bad for the money itself. Let me explain. First of all, what is money? Money is a market good, just like a cheeseburger, just like a car, just like an airplane. Except there's one very unique property: money. You acquire money not to consume it. Okay? You acquire the money to save it and later exchange it for the things you need. What do I mean by that? Well, I acquire a cheeseburger to eat it, to consume it. I don't acquire a cheeseburger to save it, put it in a vault, and then later exchange it for things I need. That's not why I acquire a cheeseburger. It's also not why I acquire a car, why I acquire even a house. Right? Some people do use a house as money. They acquire a house not to live in it, but to save it and then later sell it. That would be monetizing real estate. But the point is, in a market, we're always buying and selling things with each other. The question is, are you acquiring said thing to save and later exchange it for the things that you actually need to consume, or are you acquiring a said thing to consume? If you're acquiring said thing not to actually consume it, but to save it and later sell it, you're monetizing it. That's money. That's all money is. And you can use whatever you want for money. Okay, let's go to the coincidence of wants. If I am growing bananas and you're growing apples, okay, and I want some of your apples and you want some of my bananas, you have what I want and I have what you want. We coincidentally want what each other has and have what each other wants. Now, what if I want some of your apples and you don't want my bananas? You want blueberries. That's a problem of the coincidence of wants. We don't coincidentally want what each other has and have what each other wants. So what do I need to do? I need to find someone who has blueberries that wants bananas. I sell my bananas for blueberries, but I'm acquiring the blueberries not to eat the blueberries. I'm acquiring the blueberries to later exchange the blueberries for your apples because I want to eat the apples. I just monetized blueberries. I used blueberries as money for the very simple reason that I bought the blueberries not to consume them, but to save them and later exchange them. That's what made them money in that instance. That's it. So once you realize all money is a market good that you are acquiring not to consume, but instead to save and later exchange, then you realize money doesn't actually need to have non-monetary uses. In fact, it's not good for it. Let me explain. Gold, okay? What makes money valuable in large part is scarcity, right? You need the money to be such that the only way to acquire it is by expending time and energy, which is what we all do by working and producing value. If I have to produce time and energy to acquire dollars, but someone else can just print them out of thin air, that's not good money. That money will fail. It'll be highly inflationary. It'll distort our ability to price and exchange our collective efforts. That's what fiat is. Not good. Okay? So how can you measure the scarcity of a money? There's something called the stock to flow ratio. How much existing stockpile exists versus what's the new issuance? What's the flow? Okay? And so, for example, gold. Okay? Gold's inflation rate's about 2%. So there's a large existing pile of gold that already exists. There's about 2% more created relative to the existing stock. Now, to have a better stock to flow ratio, you want the biggest stockpile you can possibly find. You want there to be like 10 times as much gold as there actually is, because every new issuance means it's smaller relative to the larger stockpile. Does that make sense? Let me give you an example. Let's go back to my bananas. Let's say Jack Bananas is the money. There's only 10 Jack Bananas, and I produce one a day. That's a lot of new stock, because when we go from 10 to 11, that's highly inflationary to the banana pile, right? What we wish is that there was 1 billion Jack bananas. And if I produce one new Jack banana, that's hardly inflationary at all. That's 1 out of 1 billion. The stock to flow ratio is tiny. Who gives a fuck? So the larger the stockpile, the scarcer the thing relative to the new flow. So when something is used non-monetarily, it reduces the stock. The stock is only the monetary stockpile. So if half of the gold in the world is used to make electronics, to make weaponry, to make iPhones, it reduces the total stock that's measured relative to the new gold that's being produced. You actually do not want the money to be consumed. The point of the money is to not consume it at all. You don't want to be able to eat your money, to wear your money, to build your money with iPhones. So you don't want any of that. You want the thing to just be what people acquire, not to consume, not to eat it, not to fly it, not to drive it, not to wear it. It's the thing that they acquire to save. Because then the monetary stockpile will be as big as possible. And for Bitcoin, the flow ends up being zero. It's the only thing where the flow gets to zero, meaning it's a fixed supply, only 21 million. There is no more flow. And so when people say, dude, what the fuck? Bitcoin doesn't have any other use cases besides being money. Good. Like, I can't touch it. I can't hold it. I can't put it in jewelry. I can't put it in my iPhone. Good. If half the Bitcoin, think about it this way. If half the Bitcoin was used in rapper music videos and in jewelry, then the new Bitcoins that are being mined would be way more inflationary to the total stock. We want it to be 21 million. That's it. And the fact that the halving happens each time, it gets less inflationary over time. So it's all according to plan, how money's supposed to be. And when idiots like Peter Schiff say, oh, well, Bitcoin can't be used in jewelry and gold can, there is a fundamental misunderstanding of how basic economics works. Why did gold beat out silver as the metal? Because it was the money that had better monetary properties and was used more for money. Silver has more non-monetary demand than gold. So why is silver not better money? It has more monetary. Look around you. There's silver everywhere. In my laptop, on my walls, my little cupboards pull out. There's silver. There's silver everywhere. Silverware. I'm eating, when I go eat dinner with my girlfriend after this, I'm going to be using my silverware. Why is silver not better money? It has more non-monetary uses. Well, because that's not the point. The point is to be only monetary. We move on. Dylan, can you ask Jack for me what he thinks AI is going to do to financial planners / advisors, and if he was in my shoes, how he would pitch Bitcoin to clients? I think Bitcoin is probably more long-term threatening than AI to, it depends on what you're doing. But I would say, hopefully, we don't need as many. I don't want to be disrespectful. So, I mean this with no disrespect. But hopefully we don't need as many financial planners and advisors, because it's really simple. Money that you need to save, you save in Bitcoin. Money you need to spend, you spend. And that's it. And if there's a company that you want to invest in because you believe in it, then you buy equity in it. And that's it. And it's not that complicated to save money. Unfortunately, the problem is right now, because we live in this destructive monetary era where all of our currencies are being debased and we're living through persistent levels of inflation where you can't just save. Everyone needs to be an expert in equities, in bonds, in Japanese monetary policy in order to just survive and end up buying a house. And that's fucking bullshit. And what you get, one of the best things about money is what's called the division of labor, is where humans can hyper specialize on very niche things because they don't have to barter. I can't go to Whole Foods tonight and say, hey, I recorded an episode of JMS. I'll take 2 ribeyes. They'll be like, I don't give a fuck about whatever you just said. What am I supposed to do with that? I need money. I need money. That's what pays my rent. That's what gets me the things I need. I don't know what you're talking about. So instead of needing to barter, I get paid money. And that's the division of labor. It allows humans to be experts in really niche things. So we have financial planners and massage therapists and doctors and CEOs. And instead of bartering, we all have money. Now, the problem is if the money's broken, people are only spending half their time on being a good doctor, and the other half they're spending speculating, studying S&P 500, studying Robinhood options, studying Japanese monetary policy. And it makes us all worse at our craft because we're spending so much time just trying to save the work we've already done. It's bullshit. So if I'm being honest with you, I hope that we can like move on from that, where it's like actually really easy to save money. That's my goal. I don't know, bro. Now, when is that time? When is that going to happen? And like, am I saying that like, you know, you should quit your job? No. Of course not. Of course not. But I hope Bitcoin solves that for us, where it's like, okay, I do something. I earn more than I spend. The excess is called savings. I save in a hard money, Bitcoin, the best money that we have as far as I'm concerned. If I want to own equity in, you know, future work of, you know, some group, I buy said equity as an investment. And that's it. And I go about my life. It doesn't get more complicated than that. I don't need any advice on how to do that. Okay. Strike questions. Hey, Dylan, curious to know a rough timeline for the line of credit to roll out to more states. Jack said it wouldn't take long. Any more details? I don't think we want to commit to timelines because it's never beneficial to us. Like, what if something changes? Then I just look like a liar, and that's no fun. So I would say the plan is not to take, this is not like a yearly rollout. This should be quick. How quick though? Again, we gave it to a few states. I want to see how that goes. And I want to just make sure that the product is perfect. It's a brand new, the Bitcoin space hasn't really innovated a lot on credit. Everyone just has these like 12-month loans, fairly the same pricing, fairly the same LTV, you know, blah, 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 blah. We're starting to really innovate here, which I'm really excited about. We're going to push the needle in this area, which is really exciting. But I just want to make sure we do it right and that like it's the quality of product that people expect from us. That's all. Any talk of optimal way to migrate the loan product to the line of credit product? I don't know the answer to that. It doesn't look like there's an answer here from anyone on my team. So I'm going to say I'll get back to you on that. I'm not entirely sure. It's not a bad idea, though, I'll tell you that much. Dylan, can you have Jack touch on sub-accounts on Strike? It's coming. No timeline, but it is on our roadmap. I know that for a fact. Question, Jack, what's the latest timeline for yield on cash? Thanks, brother. We're working on it. Again, I feel like a lot of these are, I don't have a specific timeline for you guys, but these are all like actively on the roadmap. Like we're working on them. Like I had a meeting this morning about yield on cash. So like super active priority for us. So, you know, like hopefully Q2 and we're at the end of Q1 type of thing for us. Dylan, we have been asking for multiple episodes. Can you have Jack cover where we are at on the sub accounts? Let's see. This is an answer from the team. Transparently, we prioritize getting the line of credit done and out to the market. And now we're back working on this. We call it stacks internally, these sub accounts. We're excited to ship it in the first half of the year, which means in the next 3 months. Next 3 months. When you pay your bills, becomes a taxable event. How do you specify what BTC you used? Is it Bitcoin from 5 years ago? Bitcoin you bought at 126K, cap gains? Why I don't do this, it's very confusing. So we use HIFO. It's the highest in, first out. we think that that's the most straightforward approach. It should relieve you of all of those concerns and confusion. Obviously, you can file however you want, but we use HIFO, and that's how the product is able to support you in that capacity. Hopefully that's useful. Let's see. Okay, other questions. Sometimes these are fun. Favorite place to visit in El Salvador and your pupusa order? I'm not going to lie. When I go back to El Salvador, I actually don't usually get pupusas because I'm more of a carnivore guy now. So, but I had pupusas when I was there. They were very good. I don't know what my favorite one was. All of them. Any of them with cheese, like a very cheesy pupusa is very good. They've got some hot sauce. It's nice. It's nice. I tried to use the website, but cannot change the slides. It's stuck on the first slide. No UI elements. Does Jack have to enable that for the latest slide, or is that some issue with Brave? I don't know. I have to admit, I did not test my slide deck in the Brave browser. Maybe that's it. AI is useless. It works in Chrome. It works in Safari. It might be a Brave thing. I can look into it when I have time. But I would say use Chrome or Safari if that's okay with you. And yeah, it works there, at least for me. And if it doesn't, just write a YouTube comment and I'll take a look. Yo, Jack, can you tell us more about how/why you use the sauna as a spiritual practice? I don't know how spiritual it is for me. Well, not that it's not spiritual. It's not spiritual, but it's not spiritual. I would say it's more just like a health. I've gotten into just like being healthy. The health rabbit hole reminds me of the Bitcoin rabbit hole, where the more you learn and the more you're curious and the more you kind of build your own opinions, you realize like, holy shit, a lot of modern medicine, like modern, like a lot of modern medicine reminds me of Keynesian economics, where I'm like, this violates all first principles thinking. It doesn't make any sense. Like, why is everyone so loaded up on carbohydrates all the time? So anyways, I got into sauna just for the very direct health benefits. And things like I optimize for my VO2 max. My cardiovascular age is a lot younger than my actual age. My VO2 max is very good. And so sauna, I've benefited from the health benefits of sauna. It's also probably spiritual as well, but I would say it's more of like a health thing for me. Like the reason I do carnivore, and honestly, if you guys are interested, maybe someday, this is the thing, like with AI, anything's possible. I can probably build something that kind of walks through my health interests. And, you know, I'm sure you guys can teach me a lot. There's a wealth of knowledge out there. I'm, you know, as much as I know about Bitcoin, I would not say I'm as much of an expert in health. I'm much more of a pleb just trying to learn. So maybe I share more and you guys can teach me a thing or two. But things like carnivore, sauna, I have to say, I know weight training and strength training is theoretically better than long distance running and cardio and stuff, but I just really enjoy the cardio stuff. I love running and playing basketball. So I either long distance run or play basketball. Like for example, today, when I usually would play basketball, I'm recording this, so I can't play basketball on Mondays. So I'll go running. So I'll run or play basketball 3 to 4 days a week. And then the days that I don't run or play basketball, I'll do weight training. So I probably weight train like 3 times a week. And I stick to relatively strict carnivore, but it's not hard for me at this point. It's just what I prefer. Like I don't want to eat pasta or a bunch of other shit. I just prefer steak, and I order from farms, like big bulk orders. So it gives me all different types of cuts of meat, and it's usually fun because I'll get a cut of meat I've never cooked before and I got to figure it out, and I got a smoker, and that's fun. And yeah, I try and sauna almost every day. do like 20 minutes, one session. And yeah, my heart rate is like low mid 50s. My VO2 max is very good. My cardiovascular age is a lot younger than me. And yeah, my blood panels are really good. Trying to think. I don't know. I've always kind of considered, open sourcing more of my life. Not to imply that people will give a fuck. They probably won't. But there's a level of freedom in like open source. And, like the freest man is a man with no secrets. And sometimes I'm curious, like, should I just upload my like blood panel to the internet and my diet and my finances and just kind of share with the world how I'm navigating things? It could be cool, and like a very transparent approach to being the CEO of a big company. Again, like I don't think people want to do business with large corporations. I think they like doing business with other people that they relate to and they see themselves in. And that's who I like, supporting local businesses and going to local butchers and local restaurants. It's the same thing. So I've thought about that. Usually I've never had the time, right? Like all this stuff feels overwhelming, but with AI, I have the time for whatever I want. So anyway, that's my answer. Okay, guys, been 2 hours. Time to call it for today. But I appreciate you guys. Hang in there. Wild times. Be careful. Now is not the time probably to I would turn on your DCAs, be humble, stack sats, hunker down, be careful. I would just, all of those things, all the things we always say. Interesting times. We'll see how things play out. I mean, the U.S. is the greatest country in the world. Sure, we'll figure it out, but certainly interesting. No doubt about that. Not boring. And as always, you guys can't hurt my feelings. So leave comments, questions, feedback, and all of the good stuff. I check it out. I don't have like a team that reads through everything. Like, it's just me. It's just me. So in my free time, sometimes when I'm laying in bed, I flip through the comments, take some notes. So I saw someone ask if I'm going to have any guests ever. I was thinking about that. I don't know, though, if the guests would be Bitcoin specifically. Like, I was thinking, like, maybe I get, like, the butcher on that I order from and just talk about meat. I don't know if you guys would be into that. I could also obviously bring on Bitcoin people, too. But I don't know, like, how many times are people going to interview Lynn Alden? You want me to interview Lynn Alden? I could, if you want. But it might be cooler to, like, expand it a little bit and talk to other founders. I have some mentors that aren't necessarily Bitcoiners. Like Jason Fried is a mentor of mine. And he has a lot of really good insights just about creating companies. So I don't know. I thought about maybe having like non-Bitcoin conversations on here. Maybe they would get like only 10 views because no one would care. That was an idea. But anyway, give me feedback like that. Kind of curious what you guys would be interested in, what you think. And I'll talk to you next week. Take care of yourselves. Peace and love. Thanks for the support. Take care. And see you next week in New York.